Henry Blodget, Business Insider, joins us now to discuss it. So, Henry, what do you think is going to happen? Are they going to spin it off or sell it?
I think they'll spin it off. They've been trying to sell it for years, and there have been no takers at a price that the takers actually think is fair.
I mean, what's the real value in AOL? The business, as we know, the valuation has come down so much. Mind you, at the pinnacle, maybe that was certainly inflated. But what's the real value in AOL?
It's a very good question. You think of AOL, it's basically there are some attractive little businesses in a house, and the house is collapsing around the businesses, and nobody really knows. We had one possible silver lining in the quarter, which is that the advertising business collapsed slightly less slowly than in the last quarter.
Less
so
bad is good?
maybe we're getting into a flattening and stabilization, but it's just not clear what the future is.
What are some of those attractive little businesses?
They have a nice content business. They have a blogging platform, which is doing very well, growing very rapidly. Some of their other businesses, AIM is still powerful, but it's a very good question, and nobody is clear on what story AOL is going to tell when they go public.
How's it going to compete when you've got Yahoo retooling its website along with MSN? I mean, they're really, working here. I mean, how are they going to compete with these guys?
I think AOL has to combine with either Yahoo or MSN. You have three big portals now. There are actually four. It's AOL, Google, Yahoo, and MSN. There have to be three. So there's got to be a combination.
But wouldn't one of those other portals be even less inclined to pay up for AOL, given the fact that they've got a whole lot of what AOL has to sell?
That's right. I mean, this is the problem. Tim Armstrong, the new CEO, he came out of Google. That is the most exciting thing that AOL has to say right now. And he may well be able to come out and say, look, we are going to do to the display ad business what Google did to the search business. If you can tell a good story around that, there may be some excitement. They will cut costs, so you'll probably see the bottom line go up through next year. But to get the top line really growing from here is going to be a real challenge.
Bottom line, this does get done.
I think so. Time Warner's
made it.
They're certainly heading that way.
All right, let's talk a little bit about NBC Universal, because obviously that's a big story. We've got a valuation, looks like a valuation of about $30 billion. Does that seem right to you?
It seems reasonable. The split to Comcast looks strangely low. They look like they're getting too much of the company, but then you realize that they're intending to pay Vivendi out of the earnings of the company going forward. They're taking on $9 billion of debt, so it starts to look more reasonable. To me, the most interesting thing is this is a Brian Roberts play on I've got to diversify myself. I don't know what's going on in the cable business. Putting the two together has been shown to not work. We have a classic example with Time Warner, and Jeff Bewkes has made his feelings known. But I think the way Brian Roberts is looking at it is, look, I've got to diversify out of the pipe business. And whether I use them together is a different question than I take some of my shareholders' assets and put them in a business that's different.
Henry, very quickly, Brian Roberts is in it for the long term. What does this mean for Comcast shareholders in the short term?
Short term, I think they're going to scream. The same thing that happened with Disney. I mean, people are rightfully very worried about this, especially with what happened with Time Warner, where there doesn't seem to be that much synergy there. But if you're a cable shareholder, you have got to worry about the internet long term. And I think Brian is doing his best to diversify away from that.
All right, we got to run. Henry, thank you so much.
Thank you.